Hey, good afternoon, everyone. This is Sam, and I'll be doing the free video for March 23rd, 2021. So another sloppy day in the markets today, especially sloppy in the Russell. It was down almost 4% today, whereas the Nasdaq actually made a valiant effort to try to break out, but at the end of the day was just kind of stuffed by all the selling market-wide, especially in the Russell. There's a really interesting dynamic going on in the bond market where there's a potential for a low in the bond market short term, and there's actually a potential for a short squeeze in the bond market, meaning that bonds would go up and that interest rates would come down temporarily. And that dynamic really benefits the NASDAQ and it tends to hit the Russell. And we certainly saw that today with a massive outperformance by the Russell, or the NASDAQ, I should say, relative to the Russell. So real quick here, I do want to show you guys a pattern in the NASDAQ that's developing, and that is this inverse head and shoulders that's developed across 13,300. My only concern with this pattern is that it's become kind of a very popular pattern. It's somewhat of a meme at this point, and everyone sees it. So it hasn't triggered yet, but it does have some underlying signals to say that it could trigger higher. And at the very least, it does indicate, at least to me, that the place to focus or the index to focus on would be the would be the Nasdaq, much more so than the Russell, just because of the dynamic in bonds. So the breakout level here on NDX to the upside, if this pattern indeed triggers, is going to be 13,300. Above 13,300, there is a lot of room, and this would be an extremely bullish breakout to the upside that would imply a retest or even higher than the all-time highs. So that would take you to fresh highs if this pattern breaks out. But don't take it for granted because there's a lot of mixed signals right now. And again, you haven't yet broken this 13,300 level. But the signals underlying the market, especially that squeeze, do look generally positive. The flip side is that if this pattern doesn't work out and we start to break lower here, let's call it below the level that I have is actually 13,000, but just the more conservative level would be 12,800. If we break below there, I don't have anything below the market until the lows, which come in about 600 points lower. So if the bulls fail to materialize this pattern soon, and this has to be in the next week or less, then the potential that we could actually roll over and retest the lows certainly is there. So be aware of that. I think in the short term, it will be better to be in the NASDAQ than the Russell, certainly. Now, very quickly here, let me just show you this pattern. It's a pattern that I've been showing the members in the room and that I'll share with you as well. And it's a pattern over there in Asia in the Hong Kong market. Now, the reason I show you this pattern, I just think is kind of neat because it is relatively clean. So oftentimes what happens over there in Asia precedes what happens here. So what's been the pattern here on the Hang Seng, which is the Hong Kong market? Ever since it crossed positively here, where you got the 21 crossing the 50, which was right around the election, the green line has stayed above the blue line the whole time, and you've had a really nice trend. Now you've actually crossed the opposite way. So the positive signal that was given back here is now being expressed as a negative signal. Okay, that's just one data point. The inverse head and shoulders that we see on the NASDAQ is being kind of juxtaposed, if you will, by the conventional head and shoulders that we're seeing here in the Hang Seng. So you see how it's basically at the neckline right now, and the NASDAQ's doing the opposite. You have conflict here, and basically it means that one of these patterns has to give, right? Either the NASDAQ rolls over and this one plays out to the downside, or the NASDAQ pops through and this one resolves itself and doesn't break and actually goes and reverses. So I just want to bring this to you so that you're aware of what's going on internationally. In Asia right now, it's very heavy and it makes for the signals to be very mixed. So caution is very, very important. Let's go back over here for a second. So there's two trades that I have on at the moment. I got short. Well, actually, let's talk about the long first. So one of the cleaner long signals, in my opinion, is still Wayfair. Now, again, it's not going to work if the market does indeed roll over. You're going to be hard pressed to find anything that would. But this is still one of the cleaner, better looking charts out in the market. We've talked, our previous video talked about why, so you can just check that one out if you're interested. But one of the cleaner signals. But today I actually got short JPM. So went home long tech and short banks. And the idea here behind the short bank story is that the signals are starting to come through, and like the dynamic that we talked about, some things like higher bonds, and that's going to be mostly momentum tech. And then there's some things that really don't like higher bonds, and most directly, it's going to be the banks, and probably most directly is going to be JPM. So here on JPM, you've got the break below the 21, which is a fresh break. You have excessive momentum signals pretty much everywhere on this chart. Pretty much everywhere, and you have this squeeze that's forming, right? So on JPM here, I'm looking for this thing to get back to about 145 as a first test of support. I do think it bounces at 145, but I'm perfectly okay with it, if it just gives me about $5 to the downside here. So I think, if you like this idea and the squeeze is implying a valid short here, and you're seeing a lot of momentum breaks, try to get short this thing on a kickback to the moving averages like today, and then that opens up the door for the 50. Okay, so I think in this market, it pays literally to be fast with your trades. It's very difficult to swing trade this because you have a lot of conflicting signals. So again, as you go and you start your trading day tomorrow, be aware of both the positive, which is the Nasdaq and potentially bonds, and then be aware of the negative, which is international markets, the Russell, and again potentially bonds, because it's interesting that bonds kind of would be both positive and negative. So we'll see how it all plays out. Hopefully the video is helpful to you. Come check us out at simplertrading.com when you get a chance. This is basically what we do there every day, and you get to be part of the what I think is the best trading community on the planet, basically. So hope to see you there, and we'll see you for the next video, guys. Cheers.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me